RKB Accounting specializes in cross-border taxation. Your one-stop solution for filing taxes in the United States and Canada. RKB handles income tax, sales tax, payroll, and bookkeeping, and also helps in incorporating your business on both sides of the border. Please visit us at rkbaccounting.ca to learn more about our services.
In the last class, we did the sample T1. We will revisit those topics once again quickly. So let's create a T1. T1 is a Canadian personal income tax return. And every individual has to file a Canadian income tax return if he is resident of Canada for tax purposes or he has income from Canada. Personal tax return always work on calendar year basis, that is January 1st to 31st December. Your personal income tax return is due by 30th April of the following year. But if you have a business income to report, if you are self-employed, then your filing due date is by June 15th. So most simple way to prepare your return or your client's return, the first task is to collect all the income. Rental, all the T slips you see, T1, T4, T5, T4A, T4PS, they are all income slips. So first thing you need to ask, what are your T slips? And those are pretty easy. You can just pick up those T slips, look at the box number and fill out the numbers in the respective box. To make your preparation smooth, you can look at the comparative or even on T1 and see what are the incomes are applicable and check mark that, okay, this income is applicable, this is not, this is not, this is not. And if some income is applicable, suppose your client says, or you have an investment income, then you know that I need to, because I invested in shares or bond, and I need to report any investment income. It may happen that you have not received the T slips like T5 dividend income report, in dividend and interest income reported on T5. So then you need to find out from your financial institution or from your client that do you have investment income to report? And the financial institution may say that, okay, here is your T5, or this year there was no income. Or you can log into your financial account, the broker account where you trade or invest, and you can find out or download the slips from there as well. The ones you finalize that, okay, these are my income that I need to report, then you look at what are the deductions you can claim. And you can keep this list handy with you and you can check mark, okay, this is applicable, this is not applicable. I did some childcare expenses, oh, I can claim that as deduction from my income. Most commonly comes is the RRSP or RPP. RPP is normally reported on your T4 because it's an employer-sponsored pension plan. The only thing you do yourself is RRSP, and most commonly is childcare. These are the two most common which applies to mostly taxpayer, unless they have some other deduction applicable. You can check it out. Once you do that, then you have your taxable income, and the tax is calculated on your taxable income. And once your tax is calculated, then you look at what are the tax credit which can reduce my income. Again, you can look into the list and you can try to find out if these are applicable or not. Most commonly, tuition fees. If you are a first-time home buyer, you can claim first-time home buyer credit. Most of the tax return software Whichever tax software you use, all the tax softwares are certified by CRA. Nobody in Canada can sell a tax preparation or filing software unless that software is approved by CRA. So you can be rest assured that most of the common things has already been taken care in the software. So for example, Canada employment amount. If you are employed in Canada and when you fill up your T4, the Canada employment amount deduction for tax credit will appear automatically. Student interest loan. If you are more than 65 age amount, spouse or common law partner amount if he or she does not have income, or if he has income below the BPA, basic personal amount, which is 14,398. So that amount will be transferred to you. Eligible dependent, most commonly it is applicable when the couple are in divorce situation or separated situation. So in divorce or separated situation, the spouse who takes care of the children, he or she can claim the eligible dependent of his children. Home accessibility expenses, most applicable when you have disability or disability related claim. Then you may need to ask your client that did you make any changes in your home to make it easy for the disabled person to move around the house, like you prepare a special staircase, or you install some helping equipment in your washroom. So those expenses you can claim here. After that, your federal tax is calculated. You can check on Schedule 1 if the federal tax was calculated properly or not. So up to $50,197, you pay 15% federal tax. From 50,197 to 100,392, you pay 20% only on this difference. 100,392 minus 50,197, you pay tax. Let me put something here. ABC Inc. Ontario, and your income is 250,000. And let's go back to Schedule 1. $7,529.55 divided by 50,197. Okay, so it's taking 15%, but on this column. So the first 50,197 is calculating 15%, and then the difference between 100,000 and 50,197, it is calculating here 20.5%. So let's look at that. 100,392 minus 50,197 and times 0.2050. And this is cumulative. So plus 7,529.55. So 17,819.50. So this tax is cumulative. So up to this amount, he paid 15%, and then this difference between these two amount, he paid 20%. So this tax plus 20% of this difference equal to 7, and then so on. The highest tax bracket for federal is 33%. So this is your calculation for federal income tax. Now let's look at Ontario income tax. Ontario income tax is up to 46,505%. Difference between 92,454 and 46,226 is 9.5%. And difference between these two amount 11%, and maximum it goes to 13.16%. So when you go to your tax return, you can see that this is the federal tax minus the federal tax credit, which we looked at, that what are the credits applicable. This is the net amount, net federal tax payable, and then this is your provincial income tax. So total become 93,000. He paid $15,000 tax on his T4. So minus 15,000, he has taxes payable 78,841. So we did that sample return in the last class, and we didn't go to the tax calculation worksheet. So now we have completed that one.